central bank gold demand remains strong despite the price of gold reaching record levels. In the opinion of one of the most reputable analysts, investors may consider taking a page straight out of the central bank's book. Ignore the price, keep buying. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Gold has been on a tear over the last couple of years, rising roughly 40%. In 2024 alone, gold has surged from roughly $2,000 per ounce to more than $2,500 per ounce. Central banks have been especially aggressive consumers of the yellow metal. Not only have they been net purchasers of gold every calendar year since the financial crisis, but the last 2 years have seen central bank gold demand at or near all-time highs. Even though demand for the metal has been rising at such a rapid pace for years, central banks are not ready to slow down, even as the price continues to break records. The World Gold Council reports that net purchases by central banks more than doubled month over month in July, climbing to 37 metric tons. In fact, central banks purchased more gold in July than any other month so far this year except January, when the metal's price was about $500 per ounce less than it is right now. In a statement, World Gold Council senior analyst Christian Gopal said, "Central banks have shown an ongoing commitment to accumulating gold in recent months. While the overall level of reported demand has cooled as the gold price has continued to rally to new record highs, it has nonetheless remained positive." Gopal added, "This commitment continued in July, as global central banks are reported via the IMF and publicly available data to have added a net 37 metric tons to official reserves. This represents a 206% month-over-month increase and the highest monthly total since January, 45 metric tons. Notably, the July numbers come on the heels of the Council's mid-year report that found net buying in the first half of the year totaled 483 metric tons, the highest total of any January to June period on record. In other words, despite the fact that the price of gold has risen more than 20% this year and now sits comfortably in record territory, central banks clearly feel compelled to keep buying it. According to the 2024 Central Bank Gold Reserve Survey, there are a lot of reasons why central banks are stockpiling gold at record high prices. Among the biggest reasons central banks are buying gold is default risk, its potential as an effective portfolio diversifier, and gold's performance during times of crisis. And the number one reason why central banks say they're buying so much gold is to take advantage of its property as a long-term store of value, including its perceived benefit as an inflation hedge. Michael Hartnett, Chief Investment Strategist at Bank of America, is also concerned about the implications of inflation, especially now that signs are growing the Federal Reserve may begin cutting interest rates even as price pressures are not fully contained. When I look at all the economic data, the risks out there, all the reasons why central banks are buying gold, and all the ways gold rounds out a portfolio, all I can say at this time is I couldn't agree more with Hartnett. Do what central banks are doing. Buy gold. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.